Impatience looks aggressive, but it isn't. It's defensive. Underneath the urge to click, there's something quieter. Fear. Not fear of losing money, fear of being left out. You see price expanding without you. You see candles accelerating. You imagine others entering. You imagine others profiting. And something inside you tightens. It whispers, you're missing it. Missing feels dangerous, not financially, psychologically, because missing feels like falling behind, and falling behind threatens identity. You don't want to be the trader who knew it but didn't act. So you act. Late, fast, without full structure. You call it decisiveness. But it's urgency. Urgency is not strength. It's insecurity under pressure. You convince yourself the market won't give you another chance. But markets are continuous auctions. There is always another opportunity. What there isn't always is preserved capital or preserved clarity. Fear of missing makes you chase extension. You enter after expansion. You buy high because you watched it climb. You sell low because you watched it fall. You justify it with momentum, but deep down you know you're reacting to emotion, not structure. Fear compresses time. It makes every move feel final. It makes every candle feel decisive. It magnifies noise into threat. And under compression, patience collapses. Because patience requires temporal perspective. The understanding that markets unfold in cycles, that opportunity is recurring, that asymmetry reappears. But fear tells you this move is unique, irreplaceable. Now or never. That internal narrative is dangerous because it detaches you from process. You stop asking, is this aligned? And start asking, am I missing it? That shift alone destroys discipline. And here's the quiet irony. The more you fear missing, the more you create losses. And the more you create losses, the more urgency increases. It becomes a loop. Fear, action, loss, pressure, more action. The only way out is not faster execution, it's controlled inaction. But controlled inaction feels unnatural, it feels like weakness, until you understand what patience actually is, not emotionally, structurally. We go there next. Patience is misunderstood. Most traders think patience means sitting on your hands, waiting passively, hoping something clean appears. That's not patience, that's hesitation. Patience is structured restraint. It is predefined criteria enforced without negotiation. It is knowing exactly what must align before capital is exposed, and accepting that most conditions will fail that filter. If multiple time frames are not aligned, nothing happens. If structure is incomplete, nothing happens. If risk cannot be defined clearly before entry, nothing happens. No emotional override, no internal bargaining, no close enough. Nothing. This sounds simple, but simplicity is violent to the undisciplined mind. Because discipline removes flexibility. It removes interpretation. It removes ego. Patience requires that you do not need the trade, that you are not emotionally invested in a level, that you are not seeking relief, that you are not chasing precision. It demands neutrality. Neutrality feels empty, but neutrality is power. When you are neutral, you are not attached to outcome. You are attached to structure, and structure is indifferent to your opinion. Here is something most traders resist. You should know before the session begins what qualifies. You should know what invalidates. You should know what disqualifies. If you are deciding in real time, you are already compromised. Real-time decision-making under emotional pressure is fragile. Predefined criteria under calm conditions is durable. This is why patience must exist before volatility appears, not during it. Once price accelerates, once candles expand, once emotion rises, your ability to think clearly decreases. So the filter must already exist. Patience is not about waiting longer. It is about refusing lower standards. And refusing lower standards means accepting fewer trades. Fewer trades means fewer opportunities to be wrong. And fewer wrong trades means preserved capital. Preserved capital means survival. Survival means positioning for asymmetry. And asymmetry is where accounts grow. But this only works if one final shift occurs. Because even with rules, most traders still sabotage themselves internally. If this deep dive into the trader's mind provided value, please let me know. The single biggest help for this channel is you hitting the like button. It tells YouTube this content matters. For those ready to build their personal trading plan around this system, our next video provides the exact one-page template I use. Subscribe so you don't miss it. Thank you for your time and your focus. This is a marathon, not a sprint. Trade deliberately.